Hi guys, and welcome to our weekly forecast video where we're going to discuss what to expect in the coming week. So it's been a while since I uploaded a mentorship video with the forecast outlook, say for the next week or so. Reason being that if you went through the last forecast video that I did, uh, where I had those targets on dollar index marked with a hand with its thumb up. That video illustrated an outlook for almost the whole of last month, and I would have expected most of you guys to have been following through with that weekly forecast. So same applies today. I'm going to do another, not that much in detail, since I want to follow it up a bit, irrespective it's a Monday or a Sunday. So I'm gonna do almost the same regarding dollar index and maybe another pair or so that you guys can also do the same and mark out the order flow on your charts. Now, it's unfortunate there are some folks that I don't get to meet up with, especially the ones that are not in Cape Town, but I expect you guys to watch these videos. And for those that I always meet on Saturday, you guys, you already have a lot of information on what to do, what to expect, what you should do on the charts. Like for instance, we've got USD Cad in focus. I asked everybody to send me their 60-day look back on USD Cad, and so far I've only got two. But if you look at USD Cad today, what happened in terms of price action, you will notice that it has actually rallied to levels that we were anticipating USD Cad to trade to. I'm just going to open the USD Cad daily chart. We had a breaker here. These highs were taken out, so with relatively equal highs. You can see here with relatively equal highs 1, 2, and 3. Eventually, they've been broken. That was the target already. 1.2945. That was the target for this week, and prices actually traded to that point of interest. Now, if you look at today's price action and having that clear understanding of knowing that dollar is bullish, right? You can clearly see that today is now panning out to be a what? A daily bullish breaker. Thereby, you are likely to have fair value. And you can see already, I've marked out already fair value on the daily time frame for USD CAD. This is fair value in relation to what? When there's a retracement to the downside, folks, you look for long entries in this price zone. Or if you want to get in, say a bit early, this is where you go to the H4. Now on the H4, you can clearly see we've got this bullish order block, right? Now remember, this gray shaded area below here is my daily fair value. And on H4, we've got this H4 bullish order block, meaning this will also be an ideal area to hunt for longs. We've got fair value here. This last down close candle, the high, and the current candle's low. There is fair value. Now remember, when you have highlighted your premium or your discount areas, in this case, we've got discount areas, right? I'm going to go back to the H4, to the daily chart. This is our daily discount array. Now, it's not just a case to say, okay, if price comes down, let me just mark it out. If price comes down to this level here, It's not just a case of saying, oh, we're now in discount, so I must buy. No, that is not the case. You are supposed to wait, right, for a catalyst in the form of a fundamental that is going to help you to push price to the upside. That means it's either negative fundamentals for CAD or positive news for dollar. Like for instance, today, you can see, I'm just going to clear up here. You see, right now, I'm just giving you an example of how you have to look at price. Now I'm going to go back to that daily chart. Now on that daily chart, we've got these relatively equal highs here. 1, 2, 3, right? They're broken to the upside. So you would have defined fair value inside this price action. Now, what was on the calendar that could have helped catalyst that move to the upside? Now we're going to go to the calendar. You can clearly see we've got building permits there from Canada, and they came out negative. This is bullish for the dollar and bearish for CAD. See, you can open the fundamental to read more information. A reading that is stronger than forecast is generally supportive, right? That's bullish for the CAD. While we got a weaker negative 9.3. The weaker forecast reading is generally negative. Now, when you get a negative reading, right, that is weaker forecast, which in turn now becomes bearish for the Canadian dollar. Now, when we go to the chart, what is bearish for the Canadian dollar? It means strength for US dollar, right? Now I'm going to go to the hourly chart. Now this is our hourly chart. And if you look at this fundamental, it came out right around 2:30, right? Now, around 2:30, 2 o'clock, 2:15, 2:45, you need USD Cad to be in discount. Do you understand that, guys? You need USD Cad to be in discount. Right now, price was already trading above the relatively equal highs, meaning we've got this old high here, right? This is an old high. That becomes a what? An old high becomes a discount array, right? When price returns, you are anticipating price to face a bit of support. Now, I've highlighted the old high. We also have this old high here. Actually, it's this one here. This is our old high, right? That's our old high. Now I'm just going to focus on that because I want to illustrate how you would have traded long on USD Cad after that negative 9.3 fundamental for the Canada. Now back to the charts. I'm going to first go to H4. Now remember, this is the old high. Look at what happened here, right? We've got relatively equal highs on daily, the red lines, and the black line represents our old high, which was broken to the upside. See this candle here. Here, that becomes a bullish breaker. Bullish breaker, you need price to what? Trade away and then retrace to the downside. This is where you'd have been looking for long entries. Now, how are you going to be looking for long entries at this specific time here? Inside this gray shaded area, you'd have been hunting for long entries. Long entries were in discount. 1, old high. 2, bullish breaker. Now I'm going to go to H1. Now this is our H1 time frame. You see, we still have our breaker here on H4. We've got our relatively equal highs. We've got our old high. You see this down candle here. There's these two down candles here. These two down candles on H1 here. If you look at the time, so that's 3 o'clock. 3 o'clock my broker's time, that's 2 o'clock my time, because broker's time is 1 hour ahead. I'm going to go to the 30-minute time frame. Now this is the 30-minute time frame. You are specifically looking to buy here in this candle here. Why in this candle? Because this is the candle that is going to close at 2:30, right? When this candle closed, right, you get a negative number. When the moment this candle closed, when you look at the calendar, it becomes minus 9.3. Then you know already you are going to be hunting for long entries, right? Long entries. As soon as this candle open, you are buying USD Cad because it is a negative number for Cad. That means positive for US dollar. That's bullish. So that would have resulted in this move to the upside. Right now, a total of 82 pips. But with the models that we are learning in this current week, amplified day trading, scalping concept, it would have resulted in your 20 pips way down here. Right in the next 30 minutes, you'd have got your 20 pips per day. But if you had hold on, then it would have resulted in what? 76 pips. So why am I doing this? Why am I explaining all this before I even start the analysis of dollar index? The reason why I'm doing this is you need to understand and learn how to link your technical to the calendar. It's not just a case of saying, oh no, USD CAD is now in discount, I must buy. You see? No, that is not the case. You do not trade like that. So this is the candle that traded into discount, right? Prior to the building permits number coming out, which was negative, and it means bullish, right? USD CAD is going to trade to the upside. If you were trading, say, CAD CHF, you'd have been looking for a move to the downside because CAD was going to lose value. But right now, CAD is our core currency, so it would rally to the upside. Now, once it traded, so this is a short-term low that has been created. Scalping concept. Low and intermediate high that was created. This would have been another nice trade after this retracement here. You can see our price found support again way in discount. You see, this is discount, the gray shaded area. Now I'm going to go to the 15-minute time frame. You see, this is discount. You've got a 15-minute bullish order block right here. This is discount. So you'd have gone long right here. Optimum trade entry for another return of close to 65 pips. The stop loss about 27 pips. That's a 1:2. Remember, you are scalping. So that's what I wanted to illustrate in regards to USD CAD. For those who were in class on Saturday, remember, we're targeting for price to trade above 1.29446. And if I'm to go to a weekly chart, based on the strength that we are seeing in dollar index, I expect USD CAD to at least test these levels here. See, we've got fair value right here. See, we've got fair value here in the form of a fair value gap. There's market inefficiency there, a series of 3 bearish candles. 1, 2, 3. We've got inefficiency there, right? So expect price to fill up that inefficiency, trading to the upside. And from current price, you're looking at about close to 42 pips. But I'm anticipating price to reach out for 1.383, which is the mean threshold of this last up close candle before the down move. So that makes it a bearish order block. Only then I should anticipate maybe a bit of resistance coming into this pair. So now we're going to look at dollar index. Let's look at dollar index and see if there's something interesting that we can look out for. So now in the case of dollar index, you can see MT5 is a bit limited on the data. I got only data up to 2017. I don't know why. So I'm going to use trading view. I'm going to use trading view for dollar index because I have got a lot of data when using trading view. So this is dollar index on trading view, and you can clearly see my chart was only going to like around this high here, right? On trading view, I can go as far as, let's see how far we can go with dollar index, as far as 1968, right? But now I'm drawing your attention to this level here. We've already filled this inefficiency. You see, uh, this inefficiency here, a series of three bearish candles, 1, 2, 3. We've got a gap there, we've got fair value, and price filled it up. We've got this inefficiency and price filled it up. Sorry, I just had to sneeze a bit. That's why I paused the video. Now, with this inefficiency, and that is where dollar index is currently. Yes, we do have fair value right here, but too much of a gap, right? And dollar right now, I don't see anything that can stop dollar going to the upside, right? Yes, we had Powell mincing his words in regards to a 75 basis point cut, but even that did not deter dollar rallying to the upside. So I'm still bullish on dollar, though my target for the year has already been reached. Remember, our target on dollar was 100. Right now, this imbalance here, this inefficiency, right around, I think it's 111, right? 111 on dollar index is quite uh, easily a target that you can look out for. So we're talking about 111, somewhere around this level here. Dollar index can actually reach out for 111. So that means to say I'm still way bullish on US dollar index. But be that as it may, we can also not negate surprises in the market where we can clearly see that price is now moving to the downside. And for that to happen, we need these lows to be taken out. You can see here, price hasn't traded below an old low ever since, let's see, we haven't traded below an old low since 20, right there, since January 2021. So in the last year and a half, dollar index has just been rallying. We haven't broken to the downside. Price did try here. You can see here, we traded below this odd low, but still there was a push to the upside. Now, with this fair value here to the downside, this will be basically a discount area for you to hunt your long entries, for you to be in a position to understand if dollar is gonna trade to the upside or not. Yes, it's a bit far, but this dollar index, it can move in 1 week. It can drop to this level here, the same way that it rallied to take out the buy stops. Now, these buy stops have been cleared, right? And price is just hovering below 103.81. Now, if we go to a lower time frame, now you can clearly see now this is daily, right? The daily chart on dollar index for short-term lows, short-term move to the downside to be valid, we need to trade below this level here. See, if we trade below, then expect this imbalance to be filled. And once that imbalance is filled now, then you should anticipate a move to the upside, right? Once this imbalance is filled, this candle's high becomes your initial support level. You need to see price struggling to break that level, and on positive news for the dollar, push to the upside. Now, right now, dollar is almost approaching what we refer to as a parabolica, and it's very difficult to trade if you really do not understand how the market moves, right? If you really don't understand how to link up fundamentals to your chart. So this is now H4 on dollar index, and you can clearly see we've got again imbalance here, right? These are levels where when price is reaching that, right, you need positive news for price to find support, or negative news for this discount array not to hold price, for this discount array not to provide support. Negative news anywhere around say 103.13, negative news from the United States, then this discount array, which is in the form of a fair value gap, inefficiency, 3 series of bullish candles, 1, 2, 3, that's market inefficiency. Expect price to rebalance that before another push to the upside. But that push to the upside now, guys, is the one that I'm saying it needs a catalyst. It needs something on the calendar that can provide that move to the upside. So we can clearly see, maybe if we try to go back, let me go to H1. You can see this is H1 now on dollar index. Now we've got this time here. I don't know what time is this. So this was on the 6th of March. 6th of March, New York Open. 6th of March, New York Open. That was last week. I'm going to go to the 6th of May, sorry. It's the 6th of May. And I'm going to look specifically towards New York Open and see if there was something on the calendar. You can clearly see we've got this member of FOMC, Williams. He was speaking right around 3:15. Around 3:15, where was dollar? I'm going to go to 15-minute chart. Right. So 3:15 for me on the calendar, that's 4:15 on the broker. Right here. 4:15. And then price rallied. If I go back again to the calendar, right? So my 2:30, which is 3:30 on the calendar, right? 2:30. Okay, where are we? We started with this average hourly earnings. They were negative. They don't have much of an impact. Then we get non-farm payrolls. This was the high impact news on all these US fundamentals. These are the most high impact news. So that's 2:30. 2:30 for me on the broker, that's 3:30, which is right here. Can you see how price dipped into discount? And on a positive fundamental for 6K, forecast was 385, and then the number came out 406. This is positive for the dollar. 3:30. See how price dipped into discount and then found support. So this was a new low, then price rallied, created a new high. If you are scalping, you're already placing, the moment you get these two short-term swing points, right? The moment you get those short-term swing points, you're now looking for retracement levels. Now remember, this is an impulsive move to the upside, and on 15-minute, we've got this bullish order block here, right here on 15-minute. Price traded away, came back into discount fair value, and it rallied. NFP, positive number for NFP, price return again into discount. Now this discount here, the gray shaded area, that's on H4, guys. See, fair value gap on H4, which in turn becomes a discount array. You can see here, this is our H4 fair value gap. Price dipped into discount, then we had positive news for the dollar. Then from there, the moment you get this NFP number, from there you know that nothing is gonna push dollar to the downside unless it is other fundamentals somewhere else, right? This is whereby you'll be telling yourself, no, you don't want to see dollar trading below 102.98, meaning that's where your stop is going to be. Because if price does trade to 102.98 on a positive NFP number, then you accept that things did not go your way. But on a positive NFP number, this is what you'd have been looking for. Price dipping into discount and finding support and rally. Short-term low, short-term high, you're looking for retracement level. The price comes back again into discount right here. See how price now stayed above the initial move that started during NFP release. See how price stayed below, right? This is what you want to see. That is trading. That is now linking your chart to a fundamental release. Now, it might sound simple when I'm illustrating here, but it's not that simple. But yes, it's also not that difficult. You just need to learn to practice. Do your hindsight study. Go back to the calendar. See any positive or negative fundamental for the pair that you are trading, right? Any pair that you are trading. Then you link it up to the chart. So as of now, right, we still have the low. The initial move to the upside was instigated by a positive NFP. And you can see now price is creating new high. This is the new high that has been created today, right there. Now, where is our discount? There. This is discount. See? Meaning if you're gonna be trading this index, which is dollar today, the moment price traded below the 62% retracement level, you'd have known that already that dollar is in discount. So I should be looking for longs. Longs on what? On positive news for the dollar. But unfortunately, the calendar was a bit light today. You see, calendar is a bit light. There's really nothing much for you to put reference to it unless if you're trading USD Cad. But if there was any fundamental for the dollar, like around this time here, what time is this? This is 1700 hours. That's 6 o'clock my time. What is it that has provided this move that we are seeing now to the upside? See? So a fundamental is important, especially when you want to perfect your entries. So as of now, we're still looking for longs on dollar index, and I've already highlighted a discount array there on short time frame, 15 minutes. This is your discount array, and then on H4 you are looking for price to dip into 103.225, and on positive dollar fundamental you look to go long. On a negative dollar fundamental, expect this discount array to get liquidated, right? So that's pretty much about it in regards to dollar index. I'm just going to look at Euro USD is the opposite, right? So we're looking to go to the downside. What is our monthly target? This fair value here. Now, one other thing, guys, you should take note. In January and February, I was expecting Euro USD to crash to all the way to 10, I think it was 106. But the way it has really dropped even surprised me. So, of course, in January and February, I didn't anticipate Russia to attack Ukraine. I didn't know about that. But be that as it may, right now, we are now anticipating Euro USD to go all the way, most probably to even 1:1 with the US dollar. Now, from which levels? Now, remember, we've moved to the downside, so price is likely to create imbalances, likely to create premium arrays for you to hunt for short trades. So this is an old low. Right. This is our old low. Let me just make it proper there. So I've already marked two premium areas to hunt for shorting opportunities. One, fair value, liquidate void. Two, old low. Now, if I go back to a weekly chart, you can see you can now refine the fair value here. See, so the gray shaded area is fair value on a monthly chart. White shaded area inside the gray shaded area, that's your fair value on weekly chart. And the black line represents old low that was broken to the downside. You can see this is now a bearish breaker. Last week price came to that breaker, found resistance, and it dropped. You'll be shocked. Watch this. You'll be shocked. That's 86 pips that you'd have got just from trading this simple rule. See where you've got your breaker. Now you're looking for the initial retest of the level that has been broken to the downside, and you short. And I'm sure this shorting opportunity came about on a positive news for the dollar. I think that was NFP. If we go to the daily, you can see there. So this should be Thursday, right? FOMC reversal. FOMC reversal and price traded to the downside. And now on the daily chart, you can see how price filled up this fair value here. See, a white shaded area, that's our weekly fair value. So this week, you should also expect price to retest these levels here, most probably that level, or it should retest the mean threshold of our weekly fair value gap, right? And once that happens, it means price is now where? Price is in premium. You see how you link up the two. It means price is in premium. And if you go to H4, right? Now I'm going to go to the H4 chart. You can clearly see here. This is your premium array. So this up close candle, that's our last up close candle. And this candle's high. That is fair value. Look where the red line is, the mean threshold of the weekly fair value gap. You see? Look at this line here. This is our level that was broken to the downside here. Check how price came back to this level. See? Price came back to it right here. And then it dropped 144 pips. See? If you go to H1, there's the drop. It means during this time here, I'm not sure what time is it. During this time, which is the 5th of March. So this is FOMC. This moved to the upside. So that's FOMC reversal, and you've got NFP here. There's NFP right there. Price was in premium NFP, and then it dropped. Positive NFP number. You are looking to short Euro USD. Guess how much? 94 pips. So that's what I wanted to illustrate with you guys, and also put a strong conviction on dollar bullishness, so that you don't get confused when you're looking at these charts. Make sure you understand that dollar is bullish at this moment, and only a strong move to the downside and we close below this level here, then we should anticipate weakness coming back into the dollar. But as long as price is above 100, dollar is still way bullish. So I would like you to look at other pairs such as USD CHF, Aussie Dollar, NZD, and Euro USD, and Pound USD. And then you do your own analysis and make sure you understood what I just said here. You look at the calendar, right? In this week, you look at the calendar and you anticipate on where you should get into the market. You can see already you've got the German sentiment, economic sentiment coming out tomorrow at 11 a.m. And if that happens, that price is in premium on Euro USD, and then this sentiment number comes out negative, then you expect Euro USD to trade lower. You see, so you just need to make sure you have the catalyst, you have the cause, which is going to have an effect on your currency pair that you are trading. So yeah, that concludes our weekly mentorship video for this week. I'll be following through with more trade examples. And yes, talking of trade examples, before I wrap up, guys, let's look at Aussie dollar. So we've got Aussie dollar here, right? So this is a monthly chart, and we discussed this in class, whereby I said just open position, risk just 1% of your account, even on a demo. Risk 1% of your account, short Aussie dollar from around the open of this up close candle here. Why this candle? Because it was validated as a bearish order block by the April candle. So any return to 0.7264 would have been an entry for to the downside. You can see my entry is a bit lower. I just needed a bit of clarification there. So now we've actually dropped like 252 pips, meaning now, because the moment price action was inside this week, it means this candle was a bullish candle at a time when we are anticipating the month to close bearish. You understand that part? At a time when we're anticipating the month to close bearish. With that in mind, any moves to the upside above the opening of this current month, you'd have been hunting for price to be in premium. This becomes an old law. A return to that level, price is in premium. You can see where my stop loss is, and right now I'm gonna move. So now I'm just gonna move my stop loss so that I don't have any risk on this trade here, and I'm gonna hold on and see how it trades until end of the month. Remember, that's the class. The lesson in here is for you to understand that even on a monthly chart, you can trade and hold on to a trade until the month is done. So now I'm going to go to the daily chart. Where am I going to put my stop loss? I'm going to trail stop this trade. I'll put it above this high, right? So what does that mean? It means I have no risk now on this shorting opportunity on Aussie dollar. There's no risk now on this trade. So whatever happens, even if price does come back and hit my trail stop, of which by that time I would have probably moved again to the downside. But the fact is, I don't have any risk associated with this trade. See? I don't have any risk whatsoever. The other thing you can also do is, right, you can see I've got a 0.1 lot size on the position. You can take half of this 0.1. So that means you are now selling the 0.05 and then you remain with 0.05 on the trade. And then you let it run until the month end. So this is what we're going to do. It's an ongoing class, and you can see the discount array that I'm targeting, equilibrium, mean threshold of this fair value gap. That's where I'm expecting Aussie dollar to trade to. So that's an ongoing class, and we'll be coming back to this trade here and see how it pans out. Most probably by Friday, we will be checking how the weekly candle has closed. So yeah, that wraps up this week's mentorship program, and I urge you guys to go through the materials, go through week 6 and week 7. Yes, there's some more videos coming for week 7, but I've noticed that many people are not watching the videos, or they just watch once and they expect to learn it there and there. That's why I've held up a bit on the mentorship video so that people can digest what is there at the moment. Watch and understand. And if there's any questions that you have, send me the questions, even private message me so that we can go through them so that you understand, guys, how to read price action, how to do your top down analysis, how to do your 60-day look back. You see, it's it doesn't help if you join the mentorship but you don't put in the work. You don't study the material because it was going to take you forever to understand the concept. The concept does work, and I'm sure you've all seen it, but you need to put in the work. Eventually, you're going to get to a point where you don't really have to look at the chart all the time. You've got your levels marked, you've got your alerts in order, and you only look at the chart when you have the cause, time, and price, and effect. Then that's how you have to come to a decision. Okay, now I understand what I'm doing. So yeah, with that, I wish you guys good luck and happy trading during the week. Thank you.